I'm Pranav, and welcome to our Decoding Asia's Venture Capital Landscape series, where we speak to movers and shakers in the venture, private equity, technology, and startup space, especially those who are attending the Deal Through Asia Private Equity and Venture Capital Summit here in Singapore. Today, I'm speaking to Ben Cheah, Ben's partner at InnoVen Capital, and we're going to be speaking about a whole variety of things related to venture debt in Southeast Asia. Can you just tell us a little bit about InnoVen Capital and a little bit about what your focus is?
Sure. InnoVen Capital is a pan-Asian venture debt provider, and we focus mainly on providing debt capital to high-growth VC-backed companies in the region. We have offices in India, China, and Southeast Asia. I'm from the Southeast Asia team, and in the Southeast Asia team, we run the operations together with my co-managing partner, Paul. We've been in the business in Southeast Asia since 2016, and we like to think we've brought the product to the ecosystem, continuously educating the investors and companies on venture debt. We think it's a good tool to use. A lot of the high-growth companies in the US and China, they all use debt. And so why shouldn't the high-growth companies in Asia use debt as well?
And actually, that's going to be my next question about, venture debt is relatively new to Southeast Asia. So why venture debt for Southeast Asia or for the broader Asia region in general? And why do you think that it wasn't something that people used as actively until, the last couple of years?
Well, my view is venture debt follows the growth of the venture capital ecosystem. In Southeast Asia, the venture capital ecosystem has really come in its stride in the last few years. More money coming into the ecosystem. With that, we get more sophistication of companies, better understanding, and more opportunities for venture debt like us. Because at the end of the day, we see ourselves as a complement to venture equity, and where if the venture capital amount grows here, so will be the bigger opportunity for us, and so will be the rise of venture debt.
What is the broad investment thesis at InnoVen Capital? Tell us your secret sauce.
We're looking for companies early stage at the Series A and up, backed by good investors which we know, and on that we would like to lend a little bit of debt capital to it. And to the entrepreneur, this helps them control the equity dilution. But of course, we're not going to lend too much, right? We're going to keep it conservative. We feel that if we do this, we're able to provide a good kind of fixed income-like return, but also have the ability to participate in the growth of the venture company.
Can you tell us a little bit about some of the portfolio companies that you have? Who are some of the highlights of your portfolio right now?
We lend to a wide range of companies. At the start, we were doing a lot of education, so transactions were slower. But in the last, I think, 3 to 4 years, it has really come into pace. And so the Southeast Asian office has funded unicorns like Karsam and Neum. And we continue to fund companies in a wide range of sectors, including e-commerce, SaaS, and agri-tech, as well as fintech.
So you mentioned a few different sectors. What are some of the broad investment trends that you're seeing across Southeast Asia? Have they changed from a few years ago? Has COVID really impacted some of the areas that you're putting more venture debt towards?
Yep. So I think it's not about COVID. It's about current market. The trend we see is more about stages rather than industries. I think we see a lot of capital going earlier rather than going at the very, very late stage. I think companies at the earlier stage have a good chance to build out the company, have a longer pathway to exit, and nowadays investors like that. So it's going that way. The other trend we sort of see is that a lot of investors are now talking about unit economics and getting back to fundamentals. Whereas I think 5 years ago, you would see investors looking at growth, right? Prioritizing growth. But now we're looking at unit economics and profitability. So it's almost like instead of looking at the top line, we're now looking at the bottom line. Yeah. So that's the main trends. And venture debt for us will follow that trend. We will also look for companies like that, and we'll follow where the general VC community is going.
So I guess it's a question about growth versus sustainability. Is that what you expect the main trend to be in the next couple of years? Are there any other things as we move into 2023 and beyond? Are there any other trends that you expect to see going forward?
Yeah, I mean, growth and sustainability is well known. Other thing that there's probably, I don't know what else well known, but it's coming. It's ESG, right? ESG and sustainability is going to factor into every investment. And so today at InnoVen, we also have these policies which we set up to assess not only the company financially, but from an ESG lens. And I think this is coming more and more. Companies and investors are going to have to set up their own methodologies of how to assess this. And companies themselves, when they fundraise, have to be socially responsible and take that into account. I think that's where the market's going.
Thank you very much, Ben, and all the best to InnoVen Capital.
Thank you.
We hope you found this content engaging and useful. You can find a lot more content like this on our Instagram, Twitter, LinkedIn, and Facebook pages, and also visit us on our website at redhill.world.